right, meantime, moving on, here is an update when it comes to Franklin Templeton. Sanjay Sapre, the president of Franklin Templeton Mutual Fund, has actually written into investors, and more specifically those investors of the 6 debt funds that have had to be shuttered down in the end of April due to a massive cash crunch that the funds went through. Given an update on the 6 fixed income schemes, of course, there are, remember, ongoing cases as well in the courts regarding the winding up of the schemes. All these litigations are going to be transferred, by the way, to the Karnataka High Court. Some of the cases have, by the way, even reached the Supreme Court. But yes, interestingly, Mr. Sapre has said that 2 schemes have actually now managed to get surplus cash, and the fund house will appropriately be distributing the money to the unit holders at the earliest. The e-voting, of course, there's still a stay on that, so that cannot be conducted until the Gujarat High Court vacates the order. And in the meanwhile, of course, the strategy to sort of try and monetize the various investments in these affected funds will continue. The schemes, Mr. Sapre says, has continued to receive maturities, prepayments, coupon payments, but efficient monetization of assets and distribution will be possible only after obtaining consent of the unit holders. So this is some progress. By the way, he's also saying that the schemes have received 1900 crores from maturities, prepayments and coupon payments from 24th April to the 15th of June, and it's the Franklin India Short-Term Bond Fund and the Franklin India Dynamic Accrual Fund that have now turned cash positive. They've repaid their bank borrowings as well. All right, well, we'll keep you up to speed and updated as and when the news from Franklin Templeton comes in. But meantime, gold prices are glittering, and how? 50,000 is within sight. In fact, Google gold prices right now on your phones, and it'll show you it's already at 50,000 rupees. Now, you may be wondering, I have all this gold lying with me. I mean, how can I capitalize on the massive rally that we are witnessing? Let me introduce Harsh Roongta, then, personal finance expert. But before I do that, I would also like to just get in a small excerpt from the conversation we had with veteran investor Mr. Jim Rogers, where he continues to be attracted to the glitter that gold offers.
I have bought a little more gold. I'm not buying a lot right now because certainly in Asia, many people are having to sell their gold and silver to eat. These are hard times in some places. So I am waiting. I would suspect maybe later this summer I'll buy more gold and silver, because before this is over, gold and silver are certainly going to turn into a bubble. When people get terrified of the governments and of paper money, they always go to gold and silver. They always have anyway, and they will again. So I'm like all the other peasants in the world. All of us peasants know we better have some gold.
All right, Harsh Roongta, thank you so much for joining us today on ET Now and on the Money Show. Mr. Roongta, clearly right now, amidst all of this fear that's there among investors, gold really seems to be a safe haven buying, as we call it. For the Aam Aadmi, for the retail investor, most of them, forget about the financial investment of gold. Most of them are just sitting in general on so much gold, and they may be just lustily looking at the tickers as they are right now with 48,000, 49,000. And all of this unbooked profit, right, that they are sitting on. So, Mr. Roongta, how can, individuals really capitalize on this rally that we are witnessing?
I think what you mean is the normal gold jewelry that most households in India have, including very, very poor households. I think 2 things there. One, I think they should relook at whether they actually hold gold, because when they go to sell, although the price looks at 50,000 is the price for 0.999 purity gold. In most cases, their purity will be 0.92, maybe even lower, and therefore the price that they will get is much lower. And please remember, they would have paid a 20-25% sort of making charges on that gold. So, what they will get vis-a-vis what they have paid is very different from the return calculations that you will show on the screens, or that any long-term curve that you show on prices will, demonstrate. So I think that's one thing. Second, most of what people hold as gold jewelry is not really investment. I mean, it's got emotional content behind that. You're not really going to sell, right? The jewelry that you got at your marriage, which is a family heirloom probably, or it was given by somebody whom you really hold uh, very, very dear. Would you really sell that jewelry? So that's not really an investment. Having said that, I think if you really want to monetize, I think the best way to monetize that gold is to sell it, obviously, and get the money and invest it somewhere else, because you don't want to spend it. So invest it somewhere else. Uh, if you don't really want to invest in anything other than gold, then the least you could do, to the extent you don't have an emotional attachment to the jewelry, is convert your gold jewelry into a gold monetization scheme. Remember, you will get back gold at the end. You will get back physical gold at the end. Obviously, you will not get back your jewelry, but you will get back physical gold. The capital gains in the meanwhile, between today and the maturity, it will be exempt. You will get interest about 2.25 to 2.5%. That will be exempt as well. In the gold monetization scheme, that would be exempt. Just a word of caution though, when you put the gold in the gold monetization scheme, you would have to pay capital gains between the cost you paid for the gold and the value of the gold today. So best is, of course, to monetize it if you want to monetize it.
All right. Okay, understood. Mr. Roongta, is now even a good time, by the way? You have this sovereign gold bond scheme. I'm assuming the next tranche will be coming next month, perhaps. The gold monetization scheme, by the way, it's very interesting you mentioned that, because that too is a great way, really to sort of make use of all that gold. And yeah, there's e-gold, gold ETFs. Gold ETFs have been the best performers in 2020 for obvious reasons. So, is now really a good time to be investing in this financial gold, like you mentioned? Of course, I'm not talking about the consumable gold like jewelry, etc. But yeah, is now a good time even to be buying into all this gold?
Any investment, especially in a volatile asset like gold or equity for that matter, should be based on a properly constructed financial plan under which you would have some kind of an asset allocation that you would have for yourself. And in that asset allocation, I think any financial plan in India should allocate between 5%. I recommend 5%, but it could be, depending on your view, 5 to 10% of your overall portfolio can be in gold, financial gold, not really in physical gold. And the point there is to build it systematically. Don't do it uh, based on prices, on trying to time. I don't think anybody can succeed in. I mean, it's okay for Mr. Jim Rogers to do it. He does it for a living. I think a normal lay person isn't really going to be able to time his purchase. In fact, he's going to end up purchasing at the highs and selling at the lows. The best way to do that is to do a systematic monthly purchase. So if your purchase is small, say about 20,000 rupees a month, then you should go for gold funds, simply because it gives you an ability to do systematic investment, which more than trumps the expenses that are charged in the gold fund. Plus, of course, the capital gains are chargeable. If you have a larger allocation for gold and larger amount, again do it systematically, but then you can look at sovereign gold bonds, because then sovereign gold bonds will give you return of gold plus interest. Although in the case of sovereign gold bonds, the interest is taxable. The capital gains is exempt provided you hold them on till maturity.
All right. Okay. Now, Mr. Roongta, another factor that this entire rally in gold has brought about is rejigging. We say that maybe 5 to 10% of your portfolio should be in gold. Correct me if I'm wrong, of course, but yeah, a certain portion of your portfolio should be in gold. With this rally that we've seen, come by in gold, and in turn with equities not really doing that well, do you think that investors should sort of ensure they rebalance their portfolio?
So I think rebalancing should be some sort of when you rebalance, should really be pre-decided in terms of, say, once a year or something, unless there is a major event that has happened. Okay, if like March 23rd could have been a major event when equities fell. Now, if you rebalance because gold has gone up, it will be to bring your gold allocation down, not up. So if the rebalancing here would really mean moving out of gold, not moving into gold. But the point is that as long as you've done it as per a plan, okay, I think rebalancing once a year is good enough for most people. Even if you want to do it more than once a year, do it on a prefixed date rather than trying to do it based on market conditions and market timing. I think that works best when you have a pre-decided plan and a pre-decided date for reallocation. I think that works best.
So don't look at the values of investments and then rejig. Just decide to rejig on a particular date, maybe half a year or biannually or annually, and just rejig then. Don't look at it based on gold prices going up or equities going down or whatever it is. Great. Thanks so much, Mr. Roongta, for joining us as always in a very insightful interview and conversation with you on this massive rally that we are witnessing in gold prices. Like I mentioned, Google gold and the 0.999 purity will already show you 50,000 on the cards. Okay, well, on that note, we'll wrap it up on the Money Show. Thanks for watching, but stay tuned to ET Now.